Welcome, Seattle. Thank you so much for watching and listening. That's right, we are now on YouTube. I am videoing this podcast, so if you want to watch, and rather than me being in your earbuds and you want to just see what I'm doing, head over to YouTube and just search Rise Seattle Podcast, and you'll be able to see what's going on. Today, it's just me. I'm going to be talking all about real estate and kind of what has led to the current state of our market. So since September, in context of our real estate market, since September of 2016, we have been the fastest growing and highest equity gaining city in the country since 2016. So for 20 months, we have been on this trajectory towards economic growth. What that translates to is in 2016, you could get a house for $625,000. That was the median home price. In fact, I actually purchased this house right here in December of 15, and we were right on the precipice of that. So in June of 2018, the median Seattle home price was $830,000. So there was literally a $200,000 jump from 2016 until 2018, which is just massive equity growth, right? Well, all of that changed in August of 2018 when prices fell $25,000. So now the median home price is $805,000. So what does that mean? Why did this happen, right? What's this mean for the future of the Seattle housing market? Are there any economic corrections in the future, right? Are we going to see another 2008 housing crisis? Will we lose the equity that we've actually gained in our investments, right? Some of us have put a lot of money, me included, right, into this basement, into our kitchen, as you've seen on our blogs. Are we going to lose that equity? And do we have enough savings, really, to weather the possible storm? At the end of the day, really what I'm asking is, Seattle, are we going to be okay? So that's what I'm going to talk about on today's Rise Seattle podcast. I hope you'll join me, and let's dive into it.
Welcome to Rise Seattle Podcast, a podcast about Seattle, the people, their stories, and Seattle's future. Here's your host, Tyler Davis Jones.
So since 2013, I've helped hundreds of people buy and sell their homes here in Seattle and the surrounding Puget Sound region. And this process, especially in Seattle's competitive market, can be downright scary. But what happens when the market is shifted? There's so many other questions that you have in your brain as a homeowner or a possible home buyer that I'm going to hopefully cover today in the podcast. So today I'm talking about what the Seattle market has done, what it's going to do or is doing today, and then what is going to be happening in the future, or at least what are economic predictions for the future. I'll also be talking about whether or not it's a good time for you to buy or whether or not it's a good time for you to sell, and ultimately give you the data so that you can make the best possible decision that you can make. All right, so first up, how does the market look at this time? So the first thing that we really want to look at, a good indicator of the market, is inventory. September 2017, we had 0.8 months worth of inventory across all Seattle, right? That's all inventory. Now, what does that actually translate to? Well, what that means is we basically had, if there were no other listings that were brought to market, we had 25 days of listings. And then if no one ever brought another listing on, we'd literally run out in 25 days, okay? In September of 2018, we had or have 2.3 months worth of inventory. This translates to roughly 70 days worth of inventory, right? So a balanced market is 3 months worth of inventory. That means it's not a buyer's market, it's not a seller's market, it is literally a balanced market, and we're sitting on top of 2.3 months worth of inventory. So what does that actually translate to? Well, the higher the inventory, the lower the demand, the lower the cost, right? Simple economics. Let's think back to our Economics 101 classes. Now, What exactly is supply and demand doing? Well, let's take a look at the percentage of listings that have sold for at, below, or above list price, right? So in 2017, in September, 53% of the listings that sold, they sold for 53% sold for over asking price. 17% of the listings that sold in 2017 in September sold for at asking price. 13% below asking price, and then 17% sold basically adjusted price, and then we don't have the data to be able to say what they sold for, if they went up above asking because they adjusted or whatever. That's a little bit more comprehensive data that I don't have. Fast forward, September 2018, 23% of listings are now selling for above asking price. So what does this translate to when you're at the barbecue, right? You're hanging out at the barbecue, you're talking with your friends, and you're saying, oh, basically you just throw some real estate up and it sells. Well, that's not the case anymore. Or it's going to sell for hundreds of thousands of dollars over asking price. That's not the case anymore. Now, 23% of the listings that actually list are selling above asking price. And the percentage was about 3%. So compared to 53% in September of 2017 to today, 23%, and it's only 3% above asking price. What does that tell you, right? Supply has increased, demand has decreased, and ultimately we're in a position where buyers have more leverage. Same thing, 19% have sold of this month, last month, 2018 in September. 19% sold for asking, 26% went for under asking, and that was on average of -2% under asking price. And then 32% people have either adjusted the price accordingly and basically sold at or below their asking price. So it's translating into sellers basically are either having to adjust their expectations or decide whether or not they actually want to list right now. And buyers, you have tons and tons of options, which is a really good thing for buyers. So, question, is it a good time to buy? Great question. Basically, you have all the options in the world. You have 2.3 months worth of inventory to choose from. This opens up opportunities for you to either get it at asking or to potentially, if the house or the condo has been on the market for a long period of time, you can come under the price point that the seller was interested in and potentially getting, and seeing if you can work out a deal. Now it doesn't always work out that way. If something's really well priced and it's in a great location and more people want it, there's still houses that are going over asking price. So that literally just happened with some of my buyers. So here's another question. So why has demand actually gone down? One of the reasons is interest rates. So if you're familiar with interest rates, interest rate is the percentage of money on top of your down payment that you pay the bank in order to get access to their money, right? It's set by the Fed, so the Fed adjusts that interest rate based off of whether or not the economy is doing well. It's been doing really well for the past 5 years now. They really haven't touched interest rates, and recently they just started cranking them up. So this time last year we were at about a 4% interest rate, and that kind of fluctuated. Today we're at about a 4.75, and it actually even went up to a 4.875 interest rate. What does that translate for you? Well, ultimately you're paying the bank more money, right? You pay the bank more money, and then you also get less money to purchase. It's one of those kind of catch-22s. As the inventory spikes and the interest rate rises, you lose more money long-term on your loan because you're giving more money to the bank, but you potentially are getting something for less because the market has softened a little bit. So that's something to consider. Let's think back to 2008 was the fall of our real estate market. 2012 was the lowest peak, lowest lull of our real estate market. So from 2008, the high, to 2012, the low. Basically in 2008, the median was $430,000. Now in 2012, the median was $350,000. So you're looking at a difference of $80,000 or a loss of $80,000. Now, fast forward 10 years later, you're looking at a median of $810,000, and you're essentially making $375,000 in equity. So real estate is all based off of what is the time frame in which that you can hold on to the piece of property to ride out wherever it's going, right? So the questions to ask yourself is, can you afford the mortgage? Can you do you plan on being in the neighborhood, or at least can you hold on to it for a long period of time, for at least that like 5 to 6, maybe even 10 years? If that's the case, then it's a no-brainer. In a down market, you buy, right? It could potentially go down further, but the likelihood of it picking back up again, history shows us that's what's going to happen. Here's another question. Is it a good time to sell? So one of my favorite things to look at that not a lot of people really think about is what's called the absorption rate. Now, the absorption rate is the inverse of the number of months worth of inventory. So you take the number of sales given in a month, you divide that by the number of available homes for sale, and then this is the inverse of the months of supply. So this is what you get, is the absorption rate. So a high absorption rate indicates that inventory is moving really fast. So for context, in March of 2018, this was the fastest, craziest market that we've had in Seattle. March of 2018, we had a near record-breaking absorption rate of 168.2. That was just behind May of 2017, which was 170, okay? Last month, we had, which was again September, the absorption rate dropped to 43.6. And this is the lowest it's been since 2013, which was a 48.5. So what you're seeing is a massive amount of inventory, and the number of buyers that are absorbing that inventory is just slow and steady. And one of the reasons our inventory has spiked the way that it has is because you have listings that are going for over whatever that month period of time is. So keep that in mind when you're selling. If you are planning to sell, you have to list at a price point that is basically in line with what the market can bear. You also have to make sure that you're marketing it correctly. You have to make sure that it's not a dump, right? Like, these are all the things that you have to take into consideration when you're actually listing. You also have to understand the days of listing something and it's sitting on the market for 7 days are pretty slim. It's probably going to go closer to 11 to maybe even 21 days. And if you didn't price it correctly, it's possible it's going to go even further past that. So keep that in mind. It's still not a bad time to list. Again, there's still 23% of the listings that are selling above asking price, but you have to do a lot of work to get it to that 23%. Now let's talk Amazon HQ 2. It is really interesting that when the head tax was announced was in April of 2018. That is when we started to notice a decrease in our inventory. It was overturned in June of 2018. We all of a sudden notice a massive spike. So what I take from that, I'm not an economist, I haven't looked at all the data, but I believe that people got freaked out by the head tax. They didn't want to list their house. As soon as the head tax was overturned, people said enough is enough, let's get rid of our real estate, let's evacuate. That was a wave of inventory that hit the market in June, and we've been swimming in that wave or drowning in that wave of inventory ever since. Now, the question is, do you believe that if Amazon is on its way out with HQ2, I don't believe so. They have like 17%, don't quote me on that, they have like 17% of the real estate in downtown Seattle. I just don't think that it's a good business move for them to just up and leave Seattle. So I believe that the tech market is safe here in Seattle. The stock market has seen some vulnerability in recent months. S&P 500 fell more than 3% on Wednesday. There are various reports that are saying that it's good news that the credit markets are not sending serious warning signals relating that the housing economy and the stock market are basically in this wave of crash. So we're not there yet. Finally, climate change. Holy crap, did you guys see the IPCC? They just released their latest climate change update, and they drew a line in the sand with their recent study. According to the report, we have 12 years to limit climate change catastrophe. 12 years. Essentially, with 1 degree or 1.5 degree an increase in temperature, we're going to lose our coral reef, we're going to lose insects, we're going to lose a large majority of our ecosystem, and we're already seeing the effects of this. And we basically have 12 years to correct it, and that's just like the damage is already done here. So whether you think we're the ones responsible or not, we got to do something about this, and let's listen to our smartest people out there. Let's just make good choices. And I know you are Seattle, so you're doing that. But let's just continue to be that light in a dark place. Let's recap all of that stuff. I wasn't trying to get on a soapbox, but I kind of did there. A friend of mine once told me that every great story has conflict. So we're in the midst of some conflict, whether it be economic conflict, whether it be the real estate world, and there's some conflict there. I personally believe in this region. I believe in it locally. I believe in it politically. I believe in it technologically. I think that we are the North Star to the rest of the country. And I think that we have the capacity to lead the country towards nirvana, towards heaven, towards whatever you want to call it, right? Towards the greater good of humanity, towards acceptance of all people. We have this capacity, this capability. We have the minds, the technology. We're here, we're in it, and we're gonna succeed, right? So I believe fully in Seattle as a whole. I believe in you, the person who's listening to this, and I believe that we have the ability to do really great things. So ultimately, I'm betting on the Seattle economy. If you're looking to buy, now is the time to get in. If you're willing to make that leap and get a good deal. If you're looking to sell, pump the brakes, sit back, monitor the market, monitor the absorption rate. Honestly, that'll give you a really good indication of what to do. If you're interested, email me, let's say riseseattlepodcast@gmail.com. I'll add you to a list where I'll just update all of these things. Thank you for listening, Seattle. You are wonderful. All right, Seattle, love you. Talk to you soon.
Hey, Seattle, thank you so much for listening to the Rise Seattle podcast. We want to thank our executive producer, Reva Hansen, our sound engineer, Frankie Santana. A special thanks to the Bad Christian Studios for letting us use their awesome space here in Ballard. And then a huge thanks to you. That's right, you, listener. You are the reason Seattle is amazing. Thank you for being your creative, brilliant, thoughtful self, and thus making Seattle amazing. Do us a quick favor, head over to Apple Podcasts, Stitcher, or Spotify, and give us a thumbs up, subscribe, and if you can, leave us a 5-star rating. That's going to get us in front of more Seattleites who care about their city and are wanting to see our city thrive. Thanks so much, Seattle, and I hope you have an awesome day.